this year, these stocks are positioned very well for that. 35 points up for Nifty Spot, 43 points up for Nifty Spot. So we are in for a good gap up start. It is 4900 plus for the Nifty. Good to see that. 4910 for the Nifty. For the Sensex, it's a gap up, and it's a gap up start of about 150 points. The small and the mid-cap indices also are off to a good start. So whichever way I cut, as of now, the initial rates are quite upbeat. They are looking quite encouraging. You want to start with State Bank of India, and then let's look at some capital good names, largely L&T and BHEL. State Bank of India is off to another good start. 28 rupees up for State Bank of India. BHEL and L&T. BHEL is at 213 rupees, up about 1%. L&T is also up by about 11 rupees. That's up about 1%. Tata Motors has retreated in quick time from levels of 300 to 220. It's a decent morning session or decent opening trade for Tata Motors, 225 rupees for Tata Motors. And then I want to look at cement, because cement stocks, they plunged on strong volumes on Tuesday. ACC High Beta 1136, Ambuja 147, up about 1%, Ultratech Cement 1390, and then the illiquid ones, Shree Cement and Madras Cement, they are also off to a decent start.
I just want to talk about the broader markets, and after that, of course, sector-specific and stock-specific news as well. The broader markets, the advanced decline ratio will just come off on your screens. It's a little tempered as compared to the frontline indices, but nonetheless, it's a firm start, and the advances are taking over. It's almost 400 stocks to the advances to about 100 odd to the declines. Early signs yet, but yes, they're holding up in the green. First, of course, it's the entire telecom pack which is in focus. There has been no decision yet on the reserve price, and Idea, Reliance Communications as well as Bharti have all started well in the green, although the first tick on Idea was a down one, but now it's pulled up and scaled up into the green. Gujarat Pipavav Port, the board of directors has now approved the project expansion plan for Pipavav at a total cost consideration of 1,097 crore rupees, and that's a gap up start there, 4.5% up in the green for Gujarat Pipavav. Suzlon Energy as well, they've announced a new turbine with up to 29% more output. So Suzlon as well as a stock in focus started off in the green. Lanco Infratech, wherein Morgan Stanley Infrastructure Partners, which is a $4 billion global infrastructure fund, is now in early discussions with Lanco to buy its 401 kilometer of highway projects in various stages of constructions which are up for sale. So Lanco, again, it's a good start there, 1270 in trade. GVK Power, wherein the Australian government has halted the process of environmental clearance to the $10 billion Australian coal mine controlled by GVK Group in Queensland in Australia. GVK Power pretty much undeterred, though it's just about marginally in the green, nudging 12 points or so in trade. We've also got Zee Entertainment, wherein the promoter company has pledged 12 lakh shares of Zee Entertainment as on May 25th. Fortis Healthcare as well, wherein the promoters had reoped a pledge of 2.96 crore Fortis Healthcare shares on May 28th. So Fortis as well as a stock in focus, holding up by about 1% or so. I just want to talk about the health of the broader market and liquid universe as well. Lanco, good start there. SR Oil, Nagarjun Construction, HTIL, IVRCL Infrastructure, IRB Infrastructure. So the entire infrastructure space is the one which is holding up well. United Spirits, HCC, Sterlite Technologies as well as On Mobile are all looking good. Weakness coming in for Escomars, Tata Communications, HPCL, GSP, Dabur as well as Opta Circuits and Cipla.
All sectors are trading in the green, and for a change, the small and the mid-cap indices are outperforming the Sensex and the Nifty. So there is more than short covering in some of the key specific mid-cap stocks. The top rated counter on both the exchanges in Lanco. I like what is happening in the capital goods space, because the capital good index now is up about 4.5% only in this week. Capital goods stocks, well, they represent what fund managers are doing and thinking when it comes to the economic health. Maybe these are some contra money managers who are of the view that these stocks, it is L&T and BHEL at these levels, they offer some value. Vetri, at a time when your view is that we are in a prolonged period of slowdown and we could remain in a tunnel for an extended period of time, what's been your portfolio strategy?
I think the portfolio strategy has really been one of now focusing more on the stock selection piece rather than the top down and the macro, because the macro is obviously challenging, it's not easy, but to some extent I think that is now well discounted, and that is partly reflected in the valuations as well, with the markets trading almost about 14-15% cheaper than long-term average valuation. So a lot of that poor macro is already in the prices. So what we've been focusing more on at this point of time is really trying to get the stock selection right, and when we look at stock selection, we are looking essentially at 2 or 3 things, not so much from a growth perspective, because growth really at this point of time is an exogenous variable and sort of hard to forecast in terms of where it may or may not come, but what we are looking at is the fundamentals of the companies in terms of how strong the business proposition is, and equally importantly, I think more important than near-term growth prospects, what we are focused on is really the health of the balance sheet of the company, because I think what's important is that yes, while we are in some kind of a slowdown, valuations are clearly supportive, and where we want to be positioning ourselves is in those companies which will eventually, at whichever point of time that growth starts to come back, are very well placed in terms of being able to exploit growth opportunities at that point of time. And it's very important then to be in only those companies where you've got both fundamentals as well as balance sheet in good shape, because I think there are a large number of companies out there right now who either have damaged business fundamentals or who've got damaged balance sheets, and I think those companies are likely to stay in the ICU for much longer, even if the economy starts to pick up some momentum. So it's really about getting the stock selection right at this point of time.
Vetri, is going to be an extremely important and crucial fortnight for the markets. Of course, you have global data flow. We'll see the Greece election result outcome on June 17th, and then, of course, you have the credit policy. Can we expect the RBI to turn a little dovish this time around and perhaps cut rates as well? What is the base case assumption for you at Religare?
Well, I mean, 2 things there, Aisha. One is, I think, as far as global event-led volatility is concerned, we've had these sort of events come and go now for a fairly long period of time. A lot of these global issues have been dogging markets for a while. So over there, I think, it's sort of a continuing pattern. There's no sign that anything will actually reach resolution. You think something is over, and then it, comes back and starts to haunt the markets all over again. So I'm not too optimistic that there will be any big bang event there. I think one just has to live with that sort of event-led volatility. On the second issue, as far as monetary policy is concerned, I think clearly the economy is now growing below potential, and that is something which will weigh in on the way the RBI looks at interest rate policy. But I think what we also have to now take cognizance of is that I think as far as monetary policy decisions are concerned, it's no longer going to be viewed in the context of just a growth-inflation trade-off. Unfortunately, given the pressures that we've had on the current account deficit and on the currency, I think the argument in terms of which way monetary policy and rate decision should go is now a 3-legged stool: growth, inflation, and currency stability, and it's no longer just about the growth-inflation trade-off. So, I don't want to be predicting what the RBI will do or forecasting what they will do, but yes, I mean, I think clearly they will need to be a little bit more dovish, given that simply the economy is growing below potential. The hard thing for them is that inflation is still proving to be fairly resilient, so it's in a very tough chair that the RBI finds itself, and I wouldn't want to be there.
The one reason why perhaps you are seeing some traction build up for the entire infrastructure space, remember there is a meet on infrastructure called by the Prime Minister today, and a whole host of things really on the agenda which are targeted. Airports, of course, 3 major airports including Navi Mumbai perhaps may get clearance. 3 to 4 new international airports as well are going to be set up, so perhaps that's the reason why you are seeing the entire basket of couple of these airport players actually hold up. On railways as well, there will be an elevated rail corridor set up in Mumbai. The Mumbai-Ahmedabad bullet train as well is going to get feasibility, or rather the feasibility is going to be discussed. 2 new locomotive manufacturing units as well are going to be set up. So besides a couple of these other players, I want to see what the railway stocks as well are up to, and whether or not you're seeing gains come in for railway stocks. And yes, again, they are holding up ahead of this crucial meeting. On the road sector, sector as well, there are targets likely to be significantly revised from the 8,000 kilometer last year, and new targets are going to be fixed on the basis on operate, maintain and transfer, that is the OMT system, and they're setting up new major ports as well, which is going to be discussed. So watch out, it perhaps may turn out to be a big day for a couple of these infrastructure companies. Vetri, your sense on how or whether or not infrastructure, which is a focal area for the government, and can we see something crucial and meaningful come about in today's meeting?
Well, we can only hope for the best, Aisha. I mean, there have been so many disappointments along the way.
Right.
There is no doubt that, targeting infrastructure investments is really one of the key ways in which we can get this economy back on track, because it does two things. A, we need the investment cycle to accelerate, to drive growth itself. B, one of the biggest challenges that we've always faced in India is that every time growth rates go up, inflation tends to go up as well. And the good thing about infrastructure investments is that to the extent that they remove your supply side bottlenecks, they also effectively raise the rate of growth at which the economy can grow without inflation starting to accelerate. So if there is a magic pill for the Indian economy, it is certainly infrastructure. But this is not new. I mean, this has been known to us for many years now. We've been talking about the infrastructure opportunity and how it can be a growth driver for India for many years now. So this is not new at all. And I mean, I just want to say talk is cheap. At the end of the day, we've been talking about the dedicated freight corridor for, I don't know what, 7 or 8 years now. So, I mean, bullet train from Mumbai to Ahmedabad, great. I'd love to see it. But, again, talk is cheap. It's really the implementation that counts. And it's really on that front that I think, all investors in India have every right to be disappointed. Everybody has a right to be disappointed because the implementation has just not been there.
Vetri, so over the years I've known you, for about 15 years now, you've always been bullish, you've always been optimistic, but for the first time you're sounding rather bearish to me. I can smell frustration in your voice.
Nikunj, you haven't been talking to me enough. Well, I don't think I would classify myself as having always been in the bullish camp. But no, I think the frustration is clearly there, and the frustration is there because I think we've lost a great opportunity. The whole world wanted us to succeed 2 years ago, and I think we really failed to grab that opportunity. We've frittered away a lot of the goodwill. We've frittered away a lot of our fiscal surpluses, and we find ourselves in a tight corner entirely of our making with very new with a lack of fresh ideas in terms of how we'll get out of this mess. So I think it is a disappointment, and as every Indian I think should be, I am rightly disappointed by where we are.
So what will bail us out? Liquidity, growth, or it has to be something global?
The liquidity and the global events will help, and they'll help the market rally every now and then. If you go back to the roadmap that I talked about in the late 90s, it wasn't that the market didn't rally. Every now and then you would see rallies which lasted 3 months or 6 months, and then the next 6 months you'd get a slide after that. So, those sort of market movements can keep happening. But, I think what's really important is what can we do to get the economy back on track, to kind of lift the rate of growth such that we are not growing below potential. Let's forget all those pipe dreams of 9% and 10%. Maybe we were drinking Kool-Aid at that point of time. But certainly we can grow better than where we are at this point of time. And that requires gradual implementation. It does not require big bang announcements. It does not require big bang budgets. It does not require announcements like FDI in aviation or retail. Those are all good to have. They will make the headlines. But what we need is simple project implementation. If you track the CMI data, they're talking about $100 billion of project investments which are lying stalled at various levels. I think what you really need is some sort of a high-powered committee which looks at all of this and takes a view on how we can get all these projects to start moving again. It's as simple as that. And I think mistakes have been made on all sides. It's not that we can only blame the government for the current mess. Unfortunately, business and industry are equally to blame because I think they've gotten used to taking a lot of short-sighted decisions. They have in some cases short-circuited government policy. So both sides need a sort of truth and reconciliation effort to get this engine moving again. There's no point pointing fingers at each other. I think everybody needs to come to the table, put their hands up and say, this is where we made an error, this is where we made a mess, but what's the way forward? We cannot allow 5 lakh crores worth of projects to just lie there as stalled projects. That's just not acceptable.
Okay, Vetri, so good to have you on the show. Appreciate you taking the time out and joining in today. It's been a decent start. Let's quickly bring up the Nifty as well and show you how the index is trading. The rupee as well is showing you some strength today, 55.53. The bank Nifty holding up, and so is the Nifty.